how willing the Swiss government is, the European government is, central bank and so on is to step up. So probably they're like, we've done enough shopping. We've got lots of other projects we want to allocate our capital to, and ones where we will be, in charge, and that was probably their thinking. But as I say, it's transparency is not the hallmark of many of these bailouts, especially when it comes to reading what the political what direction the politicians are going to take. And I think that in the case of Swiss government in particular, we don't even have a precedent to go on. So probably it's a mixture of risk aversion plus saturated portfolios.
Rustin, of course, the oil price correction as a weak fracture in this moment, a bit like Credit Suisse, as I articulated with Kate, is countered, or there lies the story, not countered by the demand recovery in China that everybody was betting the house on just 2 weeks ago when I was at IP Week in London. It was China, second half of the year is going to be paradise. That's not looking to be the case, and the first crack in G7 or Western demand and the price collapses. How do you see those two things coming together?
Well, China data has not been stellar as of yet. It's disappointed so far. You even got Chairman Li, who's the new chairman, saying that they're going to have a hard time making 5% GDP growth. A lot of the analysts were predicting China to have a 5.5 to 6% GDP growth this year, focused on the second half of the year. And everybody's been, it basically created concentrated risk in the market, because I think every trader that I spoke to was so leveraged on bullish China, that nothing else mattered. And people forget back in 2019, China's economy was in a slowdown. And just because they came out of COVID doesn't mean that they're going to need to go back to how they were in 2008. They're changing their economy from being an export-driven economy to a domestic demand-driven economy. And the domestic demand-driven is a bit harder for them to develop. Chinese consumers are not the same as a Western consumer. They're more prone to save, not prone to spend like Americans and Europeans are. So therefore, they have to change a lot of different things structurally, internally, to meet that internal, or change their internal demand profiles. One thing that I keep pointing to on the fact of lack of Chinese growth is freight. Container freight is in the doldrums. $900 to move a box across the Atlantic, across the Pacific Ocean. That doesn't make any money for container companies. When you look at actual port calls in the United States year to date, down 50% for container ships versus where they were last year. It tells you there's no consumer demand, which means there's no demand pull from Chinese industry. Therefore, China's economy is having a very hard time ramping up, as everybody predicts. Now, when you look at demand into the West, oil demand in the West is not doing so hot either. Gasoline demand in the United States is probably down about 500,000 barrels a day from where it was pre-pandemic. It has not recovered, despite the fact the U.S. has been open for 1.5 years, 2 years, depending on where you're at. The gasoline consumption is not there. So oil demand in general is not as strong as people want it to be to make all these predictions come forward about the 102 million barrels a day of demand. OPEC themselves, 2 days ago, adjusted their demand, saying Asia's higher, but the West is lower, but they kept demand constant. So they're trying to balance the numbers to keep their numbers constant, because they don't want to show this decrease in demand that's actually occurring.
Hey, picking up on that, where does OPEC Plus go in a moment like this, led by Saudi Arabia? This is, in essence, nearly a dropping knife through water. Do they try catch it? Do they stay on the sidelines? How do you see OPEC Plus managing this crisis as it unfolds?
I don't think they're going anywhere. I think, when Prince Abdulaziz says something, it's sort of, it really speaks for OPEC and OPEC Plus, that they will not tinker with the quotas until the end. But of course, if the price sinks below 70, yesterday it was threatening to go, but much lower. It's recovered a little bit at the moment, but I think if prices go lower, then they may be forced to do something. What I find interesting also is that the G7 is not lowering the price cap for Russia, even though, if you look at it, at $72 a barrel, 60, a cap of 60 isn't really going to hurt that much. So I at the moment, it looks as if they won't do anything because, if you think about it, the second half, a lot of people are predicting, including the IEA and OPEC, that the second half we're going to see a possible supply tightness. Depends on if Russia does go ahead with its 500,000 barrels.
I mean, a week ago, we were forecasting 50 basis point rise for the Fed. So things change rather quickly. I mean, last year we did see OPEC Plus, at least, I mean, their language balanced the market, but ultimately that seemed to translate into defend $90 a barrel last year. Where's the line this year, you think, emerging, or is there one?
You never know. I mean, they haven't said it, but, again, China is key. If you look at consumer habits in China, they're not picking up. Yes, jet fuel demand may rise, but, don't forget it's rising from a very low base in 2022. So I think it's a products market that I think is in a bit of a tizzy at the moment because Russia can't really place all these barrels. Some of it's coming to the Gulf, as we've seen. Some of it's going to Saudi Arabia. So I think, I don't think OPEC Plus wants to do anything that would upset the cohesion within the group. And I think that's particularly the relationship between Saudi Arabia and Russia. So I don't think they're going to take any action that is going to change fundamentals. And let's not forget, we're already in March. So if you're looking at, we're looking 2 months ahead now on prices and loadings of cargoes that are already on the water. So, the second half is expected to be tighter. I mean, the market is pretty tight. If you look at inventory levels, they are still below the 5-year average, even though they have gone up. So I think let's just wait it out and see what happens. But as I said, if the price falls much below 70, then I think they have no option but to act.
Omar, a big story in this region that has sort of stayed off the main front pages of the world, given the crisis in the banking sector in Europe and America. But that is what appears like a rapprochement between Saudi Arabia and Iran, even to the extent where we had firstly the announcement on the last weekend of the re-engagement of diplomatic relations, i.e. your ambassador comes back to each country. But now we had the Saudi finance minister yesterday, Mohammed Al-Jadaan, saying that Saudi Arabia could invest in Iran very quickly. What's your reading on all this? How should we be paying attention?
Yeah, I remember that phrase after my last intervention. I thought maybe one of the reasons also they didn't invest in Credit Suisse because they're saving their capital for a big Iranian shopping spree. But I think it's just, I mean, I think he actually, the bit that gets left off the quote is if Iran complies with all the terms of the agreement. And I think as anyone who's in the region would attest, the idea that Iran would comply with the presumably quite exorbitant demands put forward by Saudi Arabia doesn't seem likely. I think that,
Iran, in fairness, just to be devil's advocate for the moment, they did more or less comply to the JCPOA, and it was others who walked away.
Right. No, the JCPOA they did, because in JCPOA, the people who they were negotiating with were much more powerful than them. But it's not the case when it comes to something in Saudi Arabia. Saudi Arabia, you could say it's its equal or something of that order, but they don't have the power to impose sanctions or threaten military action in the way that the US, Russia, China do, and so on and so forth. So I think that if you judge by Iran's track record in terms of its relations with other countries in the region, it's not good. And it's not something that feels, remember, we actually got into this mess because Iranian protesters stormed the Saudi embassy, which is a violation of diplomacy 101. And I think Iran still has.
I don't know if we want to talk about Saudi embassy violations, but nonetheless, is this a big breakthrough from your perspective?
I don't think so. I'm a little bit more pessimistic. I think that it's more. It doesn't hurt, but I think that. Iran is not going to change its fundamental mindset. I think Iran is under a transient amount of pressure due to their domestic protests, due to their the economic problems they're facing, and so a little bit of breathing room doesn't hurt. But I don't think that the ingredients are there for a lasting commitment. And the key stumbling block is that over the last 30, 40 years, Iran has constructed a very sophisticated network of non-state actors whom it can direct and influence. And it's not going to suspend that anytime soon. It's its main asset in this asymmetric war. And it's done it in a way where it can have plausible deniability on anything those non-state actors do. And so why would it surrender that? So I think it's going to have to go a long way before we reach something significant. But what you might see in the near term is, at the very least, if there is some degree of Saudi Iranian rapprochement, that should hopefully keep Israel slightly less, aggressive in its stance towards Iran, because perhaps tacitly in its previously, more aggressive stance, it had in its mind that other countries in the region would stand with it if there was to be some sort of military escalation. And now, there's a signal from Saudi Arabia that it's not interested in a military escalation.
Rustin, just picking up on the new energy flows narrative that we've been tracking for some months now, just get your updates on that. The idea that we're seeing these much longer journeys from Europe to Asia. We had some reports over the last few days that ships are coming into the Middle East from Russia and offloading and then sitting in the waters here for long periods of time. What's the general sort of situation at the moment regarding these distortions in the tanker markets?
Well, it's just a change in trade flow. I mean, the longer ton miles has everything to do with the fact that Europe is now importing on longer distance for products and also for their crude versus the short haul that they had, for the last 10, 15, 20, 30 years from Russia. So, the fact that you've had this complete change on the logistics of supply and into Europe just reroutes the entire tanker market to where things are moving on a much longer haul just to maintain the same supply flow. I mean, if you take European demand hasn't changed for crude or for products, and Europe is importing both, then they have to come from somewhere else. If you're not buying it from your next door neighbor, you're buying it from somewhere else. It's a longer haul. Russia on the other side, they're long product, they're long crude. They have found other markets for this oil. And that oil is still flowing and still moving into other markets. So as you said, Saudi Arabia has always been a big buyer of Russian fuel oil. Even before the war, they were buying it for their utility needs. They're going to buy it again this summer. And so, yes, you're seeing that fuel oil flow starts moving into Saudi, because Saudi always starts buying in May or in March and April for the summer burn. Their demand profile goes up from about 600,000 tons a month to almost 1.2 to 1.5 million tons a month, depending on where the Hajj fits into the whole picture. And I believe the Hajj this year is in July, if I remember my calendar correctly. Please correct me if I'm wrong, Omar.
Yeah. Late June, early July.
So there is a definite need for them to have utility fuel, so they're going to keep bringing it in. So the ton mile story on tankers remains, even with the likes of India and China buying a fair amount of Russian crude. They still need lighter crudes to blend with it to make it more suitable for their crude units. So they're still buying cargoes from West Africa and from the U.S. Gulf Coast, which are on very long hauls, as well as I believe this is the largest import of U.S. crude into Europe for the month of March. About 1.8 million barrels a day coming in, which is a fairly substantial amount of Europe's needs. So the story remains, and tanker rates remain very supportive in the front.
Let's go to the survey question and sort of hit it on the nose a little bit. Are we in a elastic bounce back moment here? A lot of drama and everything sort of will trend back to normal. Do you expect Brent crude oil prices to bounce back above $80 before end of March as banking crisis stabilizes? Yes or no? Okay, just to pick up on that sort of narrative, are we in a fractured, more that what we're seeing in this current crisis is a sort of emphasis on existing vulnerabilities in the market the sort of support from the China returning is kind of fading. It was fading anyway before the banking crisis. The lack of disruption of Russian oil after the 2 embargoes had now been in place, the crude in December, the products in February. There's no real disruption to flow. Iran is exporting as much as it wants. There's no supply crisis anywhere. So a softening in oil prices was probably already on the cards. Your thoughts on that?
Yes, I mean, don't forget that, this crisis we keep talking about because of the Ukraine war was really so much, it wasn't really because of a shortage of oil. We didn't see any shortages in 2022. And I think at the moment, what you're seeing is that that one of the reasons why oil was moving higher and was supported by the fact that there was fuel switching because of the record high gas prices and LNG prices in Europe. So I think it's a divided market. I think that makes it really difficult to read, but I don't think there's very much supporting at the moment. We've had a mild winter, gas prices are way down. You're not going to see so much switching. So there isn't that much support, and also the financial crisis doesn't help. The fact that Russia, and we saw Amos Hochstein saying the other day, the price cap is working because the Russians are still selling their oil and products. I think looking ahead, we may find that we're in a sort of tighter situation. But you've got non-OPEC coming back. The increase isn't going to be from OPEC plus; it's going to be mainly non-OPEC. But it's all short term. I think we've entered into a period of short termism because of all this uncertainty. So it's very difficult to predict the future. But if you look at the numbers, yes, we may be a bit tighter in the second half, but it doesn't mean that we're going to be that tight that prices are going to shoot up to triple digits again.
And so the follow on from that, I suppose, is that if OPEC plus wanted oil price, or balance the market in their language, want 80 plus oil price, that they may have to look at further cuts if they don't get that China bump.
Yeah, I think we placed too much stock on China recovery. And let's not forget that the Chinese economy is still a bit fragile. The housing situation, you see pictures of big skyscrapers being knocked down and bulldozed. But to go back to the situation, I mean, this restoration of diplomatic ties between Saudi Arabia and Iran, I think, lowers the geopolitical tensions in the region, which are always, they're sort of baked into the market anyway, into oil prices. But, we've also got an expected visit to the UAE by the top security official from Iran. So that's another positive sign. You've got, the possibility that this will, resolve the issues in Yemen. You've got the whole Syria crisis, and it's underwritten by China. And I think that's quite important because, yes, if you talk to people who've negotiated with Iran, they say, yes, it's 2 steps forward, 1 step back. Iran can't be trusted to honor its commitments, but you've got this underwritten by China, which, has a very close relationship with both Iran and Russia. So I think that also is probably a bearish signal to oil markets because, you've got these 2 powers that have been at loggerheads. And if you see tensions easing between the two, the UAE is even more important because they've had a much harsher stance against Iran. But it all helps to diffuse some of these tensions. Obviously they exist in Libya and other places in Nigeria, but I think it's a positive sign, and also
Well, let's pick up on that. Omar, just to pick up on that sort of narrative, we have a story in our digest today. Kate just referenced it in passing, the Syria equation here. A big story in the Wall Street Journal yesterday that Arab nations seek to bring Syria in from the cold. How is that connected to these events, do you think, vis-a-vis Saudi, Iran? We saw the president of Syria in Russia earlier, or last weekend. Where do you see that fitting into the jigsaw puzzle? And is it significant?
So I think that the reason these countries sort of cut off ties with Syria was because of the supposition, I guess, that the Syrian government was going to fall, and that it was also being ostracized by the Western countries. What we've seen over the last 4 or 5 years is that the Syrian government looks like it's not going to fall, and Western governments seem indifferent to what the Syrian government's doing. And so it's now a case of, well, look, given that they're around, they're going to be there, we might as well have some degree of relations with them because we've got some degree of overlapping interests, whether it's something military or political or economic. But that's something which precedes this, rapprochement, as you phrased it, between Iran and Saudi Arabia, and I think is a somewhat independent thread. I should also add that while I agree with most of what Kate said, one thing I would disagree with is the characterization of China as underwriting it. I think China won't do anything more than like a phone call, an angry phone call to Tehran, and even that they probably wouldn't do in the case of Iran, not abiding by its terms. China, there's no precedent really for China being involved in getting countries to behave in a certain way, abide by certain rules, especially in a region which it doesn't really care about. I think the Middle Eastern countries overestimate how much China cares about them and how much it responds to their needs and considers it as an area of vital strategic interest, as long as oil is flowing.
But don't
nicely.
you think Iran or China could be potentially embarrassed here if Iran was, or either party was not to meet at least the general parameters of the agreement? I mean, China, after all, is the biggest customer of both those countries. They can, suddenly, oh, sorry, I don't want any oil this month.
Sorry, I just lost you. They said, do I think China could be embarrassed?
I mean, I'm saying that you're saying that China's would have a fairly laissez-faire attitude towards the effectiveness or the compliance with this agreement. My sort of counter on that is that China has a lot of sway as the biggest consumer of Iranian and Saudi oil, and if indeed if there wasn't the potential that China could be embarrassed, and they're very, very sensitive about being embarrassed on anything, that they could have a leverage here as the customer and the purchaser.
They absolutely have the leverage, but what they care about is their energy needs are being met. If Iran and Saudi Arabia are going to go at loggerheads, look, ultimately, Iran is not going to do something so blatant that it could be held accountable. That's the whole point. The way it does these things is it gets the Houthis to attack, or it gets Hezbollah to attack, or whatever, and it says, "Oh, it's nothing to do with us." And China says, "Well, we'd love to be, use our leverage, but we can't because this is nothing to do with Iran. This is Hezbollah. This is, Houthis." So it's all set up for China to say there's nothing we can do, even though it could do. It doesn't really care that much about the region as long as it's getting its energy needs met, and I think that will continue. And Iran will be smart enough that if it does violate the terms, and when it violates the terms, because I expect it to violate the terms, it will do so in a manner that does not, irritate China and put, as you say, China in a tough situation. And so I don't expect China, and from China's perspective, I think this was much more about getting one over the US than it was about actually achieving any particularly important strategic foothold in the region. As I said, I'll reiterate, there is a massive overestimation among people in the Middle East about how much China cares about the Middle East. If it's getting its oil, if it's getting its gas, it can slaughter each other for all it cares. I don't think it has the interest in the region that people in the region perceive. It doesn't want to take the US's role. It doesn't hurt for it to embarrass the US or to get one over the US. But this is not a vital region. Its region is in and around China. That's its main playground.
About China Sea. Let's give Rustin the last word here with the survey result. Rustin, I wanted to get, big no in this room. We'll post that on social. A bearish room this morning. Maybe everybody has bank accounts in Credit Suisse. I don't know. But if I had, I'd be very happy, because I do believe in what Rustin says. The Swiss are not going to let any bank with the word Swiss in it go down as the banking country of the planet. But Rustin, not too far away, there are countries in Europe, and again, another story that's not really getting the coverage given all that's dominating the headlines, and that is the increasing number of national strikes across Europe on the infrastructure level, whether it be transport, roads, ports, etc., and it's growing. I'm wondering, from your perspective on the ground there, and also from a shipping perspective, is there any dominoes effect there yet, or what's your outlook for that?
Well, I mean, when you look at it from, I think France is probably the strongest one that's having the most problems at the current moment, with the pension reform bill going into the French Parliament today. So there is a fair amount of strike action put in place today, and net impact, I would say, is roughly sitting around 300 to 350,000 barrels a day of refining capacity has been idled or been put into question because of the strikes. Yes, it is impacting the flow of product into refineries and then refinery distribution into the different terminal hubs and gas stations around France. And I think that's probably going to continue. I don't see it in any other countries as of yet. Because there had been some action in France that delayed transit of vessels down the Rhine. When the Rhine goes into French territory, some lock operators refused to operate, so there was a buildup in barge traffic on both the northbound and southbound traffic lanes until the barge operators came, or the lock operators came back from strikes. So it is going to have some knock-on effect. It is going to impact GDP. Because it is causing a major impact to the market. People transiting across France, there's the issue of French air traffic controllers. If they go on strike, guess what? You're not flying to Spain. So, the impacts are there. I think it's more of an annoyance to the general consumer right now than it is a massive impactor just yet. But I think, you'll see it as the data moves along. We'll see how the ECB takes that into consideration today, because they're meeting to discuss their interest rate hikes, and will that be 50 basis points? Will it be 25, or will it be nothing?
Well, we'll wrap it up there with oil, Brent crude trading up 1% in half-day trade in Asia. Will that sort of momentum continue as the Western markets open with the somewhat positive news that we're seeing out of Switzerland? There's what crisis? There's no crisis here.
As you said, there's other banks that are looking for buyers right now.
Other banks, there's other shoes to fall. The Nikkei and the Hang Seng indexes, the major equity indexes in Asia, the Sensex in India, none of them are looking too stressed out, all trading down a little bit, but no dramas there. So let's see where we go next. Gold has paused its rally, potentially looking to break through that 2000 number with the fear that's growing. There is some outlook that gold topping through 2000 could be a big sort of break to the negative in terms of fear outlook. But nonetheless, that's where the markets are this morning, a little bit sober, while the headlines still are caught in drama. We'll have to see where it goes. Rustin in Switzerland, thank you so much. Omar in Bahrain, Kate in Dubai, really appreciate your contributions this morning. We'll catch up every morning, 10:30 UAE time. All the best. Thank you.
Thank you all very much. Have a good day.
Cheers.
Bye.